Good morning. Today is Tuesday, July the 4th, and today, of course, is US Independence Day holiday. So the market in US will be closed as it did yesterday and at half day. So market was pretty quiet overnight, and it will be quiet tonight because of the lack of US market participation. So going forward, we want to take a look at what market may actually do. Last Friday, we saw the Dow Jones, including all equity index, basically rallied on the back of a upward revision in the Q1 GDP for the United States from 1.3% to 2%. So that was a major bump up in the economic outlook for the United States. So that basically supported higher equity prices on Friday. And going forward, because of the shortened week in which we are trading this week, there may be some kind of profit taking going into the week itself. So if there's going to be profit taking, do know that the market may actually drift lower. Of course, we also have non-farm payroll, which is going to be a big number coming out on Friday at 8:30 p.m. Singapore time. So do watch out for that earth shaking event on Friday. So in the meantime, there is the possibility of a pullback in the equity markets in the States. So if that's the case, an ideal place to actually position long is to go back into the market at 33,260 to 33,500 levels, which is this area here shaded in green. So that will actually helps to build a case for higher equity prices going forward. Okay, in the S&P 500, we are seeing that the S&P 500 on Friday actually managed a marginal high for the year at 4,458.5, and it is also vulnerable to profit taking, considering the factor that the market is pretty quiet and until Friday, that is to say. Now, if there's going to be any kind of pullback, the key level to watch will be this recent bottom here at 4,328.8. So if the market drifts into this level of prices without breaking it substantially, then the market have a good chance to actually rally beyond the 4,458.5 that we see so far. Over in Nasdaq did not quite make into a new high on last Friday. The high traded was 15,232 almost 233. Okay, and that is just marginally below the high for the year at 15,284.65. So that is also an area in which I think it will be a very great setup for a counter trend trade. If you have the stomach for counter trend trade, the level to actually do so will be somewhere between 15,241 to 15,267, and that will be fantastic. Very low risk, high reward setup, and the target will be somewhere at about 14,600 thereabout. So it is actually quite a decent amount of potential here. Okay, and you can also take a look at this if you think you like the setup. Over in Asia, we can see that Nikkei yesterday managed to actually challenge the high that we saw 2 weeks ago, and it did not quite. It wasn't 2 weeks ago, exactly 1 week ago. And the high traded then was 33,772.9, and the high traded yesterday was 33,762.8. So it was just a hairbreadth away from taking out the high, and it is setting up for a pullback. This morning we see a gap down, and this may actually cause some profit taking going on. And if that's so, then I'm looking at somewhere between 32,000 to 32,300 levels. So that would be a great level to actually pick up some more long position. Of course, we have to understand that there is always the risk of a Bank of Japan intervention in the currency market to support the Japanese yen. And if that's the case, then it may actually screw up this very positive looking chart here. So let's watch out for the possibility of a Bank of Japan intervention to support the yen. Over in Hong Kong, we can see the prices have managed to recover. This morning at half time, we can see that the Hong Kong Hang Seng Index is hovering just under 19,500 points, and this is actually quite remarkable considering the market is actually doing a three-wave rebound, and this three-wave rebound is at this moment very tentative. It could still unravel to the downside, but for the time being, it does look supportive. But if, like I said, if the market cannot sustain beyond this level, then there is the risk that the market will unravel back to test to go back into the range of 18,000 to 18,850 points. So do watch out. It's still a little bit weak, but let's see what happens in the second half. Over in China, as far as the Shanghai Composite Index is concerned, it is very, very strong right now. The rebound from 3,144.4 has been substantial, and the high traded this morning as 3,246.8, and it does looks like it may actually give the 3,276.5 high, which was last traded on June the 16th, a run for its money. And if it managed to clear and close above this level, it will open up the window for a challenge of the 3,370 levels. Over in energy markets, we can see there's a bit of a pullback in energy markets after trading to a high of $71.72, and there's a possible extension of this decline. Ideally, the market can hold around $68.80 to $69.36, which will actually give it a base for it to take on the $72.68 high, perhaps into $72, $73. Okay, so look out for this extended move higher. Over in precious metals, we are beginning to see a little bit of a rebound, or rather an extension of the rebound from $1,893 per ounce. And yesterday we have a high of 1,930, or almost 1,931, so to say. And this further give me evidence that there was this move below 1900 was actually a bear trap, basically trapping those people who have sold below the 1900 levels, and now the market has gone up $40, almost $40 from the low there. So it does look like the trap has been sprung, and likely to see a challenge of the 1,900 and maybe $83.50. So this will be the obvious target to go for if the market continues to rally. And over in the silver market, we also beginning to see stabilization of the silver market. However, the silver market, the structure of the rebound does looks a bit corrective to me. From the low of $22.11, the market may be doing a three-wave rebound targeting $23.27 to $23.50. So this one looks like a classical three-wave rebound, and if the market cannot sustain beyond this level, it may all unravel. Okay, over in the dollar index, we can see dollar has been struggling ever since it bounced from 101.48 to 103.23. This has completed a three-wave rally, just shy of my ideal target of 103.26 to 103.57. The high traded is 103.23. So that means that the market has there's a possibility the market may have already peaked, because this one candle after the high traded at 120 or 103.23 does give us the idea that there is massive profit taking here, and maybe not even profit taking. Maybe you are seeing a emergence of selling interest here, and if that's the case, there is every possibility the market may actually gun for 101.48 again. But I think there is a good chance later in the day, although US market is closed for the day, maybe in Europe they can take the dollar a little bit higher to 102.80 to 102.90 levels. Now this will be giving us a secondary entry levels to sell this dollar index here, if you believe that the dollar is going to go down again to test the 101.48 levels. So that being the case, all the other principal currencies should be a buy. Okay, so however, the euro versus the dollar chart here, we do have a three-wave pullback, but this three-wave pullback looks a little bit odd because it doesn't go all the way to the equality level, which ideally I would love to see the euro dollar goes into 107.70 to 108.10 levels. However, the low traded so far last week was 108.35, and it could go down, but there is always a possibility the bottom is already in place, although it's not ideal. But if that's the case, then maybe the market can go and challenge the 110.90. Okay, over in sterling, the structure is a little bit more constructive here. We see the market have a three-wave decline from 128.45 48, go down all the way to 125.90, marginally into this bracket of price, which I have laid out to be a place where I would like to see confirmation of the re-emergence of buying interest, and it did. And this level was 125.60 to 125, or almost 126 even. So we can see the market actually dipped into this bracket of price marginally before it bounced out very aggressive. You can see this bar here has a very long and sustained candle bar here. That gave me the evidence that there are buying interest, big buying interest that already in the market. But the high so far is 127.30, less than 30. But in the meantime, if we do get a little bit of a pullback, somewhere between 126.40 to 126.60 level, the 20-point range, I think that would be an ideal level to for those who have missed out buying, that would be a great level to buy, because I think the 128.50 levels may be taken out in the next surge, targeting 130. Okay, my target is 130 here, so that's a nice big juicy number there. Okay. And over in the Aussie market, I do not know what to make of this yet. Of course, the market has held out very well between 0.6550 to 0.6630, and the market has been going higher to 0.6690 so far. Whether it can sustain, I want to see more confirmation of the market going and close above 0.6720 in a more convincing way, ideally closing marginally, massively above this level. So if that's the case, then maybe the next pullback will be a buy. But for now, not so sure yet. Okay, so in the dollar versus Canadian, we have seen a dollar Canadian actually rallied from the low of 131.16, and this is quite sustainable, and the market pulls back in a very small three-wave with a low of 132.06 so far, and it does look like it's primed to go higher. If that's the case, my target is about 133.75 to 134.16. Okay. Dollar yen is a bit of a dilemma right now. We have seen a bit of a struggle here since the market traded to 145 on Friday. The market has been struggling because I did mention anything between 145 to 150 is a danger zone, because the Bank of Japan may come in at any time without notice. The last time they intervened is exactly at 145, so do watch out for 145 to 150 levels. If we see a sustained rally, the Bank of Japan may be itching to go in to intervene. So the high traded so far, besides the rebound that we saw, is at 144.90 on yesterday. And if that is the case, you can see the market has actually traded marginally above my sell zone, 144.75 to 144.90 levels. So that is a level ideally to sell. The market is just trading just below those levels here. Now, the only thing that may actually screw up this chart is this long candle bar here. This one is a hammer. And if a hammer is what is to be believed, then it suggests that there is a strong buying interest here. So that's the reason why I say the traders are a little bit conflicted here as to whether they want to push it higher or take the risk of a Bank of Japan intervention or take profit from here. And if there's going to be sustained profit taking, this market may actually drift all the way down to test this high here at 140. So do watch out for a massive decline in the dollar versus the yen rate. Okay, over in cryptocurrencies, we are beginning to see sign of a nascent recovery in Bitcoin prices. We have a three-way pullback from 31,458 to a low of 29,508, and now the market has beginning to go up. But this going up is a little bit very tentative. It's gingerly trying to test to see if there's going to be any selling pressure going on. And if the market do take out 31,458, I don't think it will be substantial. I think top side will be seeing somewhere around perhaps, let me see, I think it's about 32,000, 33,000 there about. Okay, 33,000. There is a previous high traded last May, late May, we can see the high traded was 32,000, about $400. Okay, so from that point onwards all the way to 33,000 even, those are the areas in which it may not sustain. So do look out for a rush beyond 31,500, but it can possibly go up by no more than $1,000 before it all unravels. So if you see the market cannot sustain beyond, so we can see that this current movement here is trying to test and go beyond the $31,458. If it fails, everything could unravel all the way back to 24,750. So there is the big risk here of the market failure to go even higher, and it can all unravel. So do look out for the eventuality here. That's all I have for you. And if you are not trading tonight, and go out and take a break because it's a holiday. Bye bye, take care, and I'll see you tomorrow. Bye bye.